What's going on, guys? In this video, I'm going to be showing you guys how I passed my Topstep 150K challenge in only 8 trading days. I'll also be giving you guys my honest opinion of Topstep so far. So let's first start with the trade report. Over here, you can see the highest balance in the account was 159,450. And that is actually what the current balance was. So that's where I actually closed out the trade. We could see that the best day percentage of total profit was 35%. So this is a statistic that's popular with futures prop firms. And what this is basically saying is if you have one trading day that accounts for more than, let's say, 50% of your total profits, then that would not be passing. So for an example, you can see that stat over here. So if your profits are greater than 50% in a specific day, then you will have to continue trading until it's less than that 50%. So you can see my best day was $3,300. My worst day was $3,000. And I'll talk about this day a little bit, but overall I had 3 losses that day. And you'll see that I was still able to maintain my equity curve even with 3 losses in one session. My average winning day is around 2,300. My average losing day was around 2,200. But we have to keep in mind that the one day I did take 3 losses is being averaged into that. So let's go ahead and check out the profit and loss graph. So we can see we started at 150,000. Day 1, we went up to around 931. Second day around 153. We had a little bit of a take profit and then a continuation. So we can see that this is making an overall nice uptrend structure, higher highs and higher lows. This is how we want our equity curve to look. We don't want it to look very consolidated, sporadic, price movement shooting up and shooting down. We want it the same way that we would look to trade our own price action, right? We want to see a clean trend, clean structure. We can see that the minimum balance was only actually hit once, and that was the day that I actually took those 3 losses. And then the next day I was able to recover a majority of those losses. And then the day after that, I was able to take the balance above the target here. My average profitability per trade was around $555. My winning trade percent was around 63% on this challenge. My average winning trade was 2188. My average losing trade was minus 586. And then my reward to risk ratio is 3.73 to 1. So that means for every trade I risked 1 R, I would make back around 3.7 R, which is amazing. I aim for 1 to 3s on average, and that 0.73 is just the extras when I got a nice impulse and stayed in that trade. So today what I want to do is actually break down some of these trades I took in the market for you guys and show you guys my entry, show you the mistakes I made, show you the things that I did correctly, and hopefully you guys can learn from this video. We currently are inside of the TGFX Trade Lab app, and as you guys can see, we actually called this trade on July 9th. So if I click on this picture, we can see where my first entry was actually at. And what we'll do is go to the chart and back test this, but this entry ended up being a loss. So what we did was actually re-enter this trade, and you guys can see me actually getting stopped out on the previous position with that buy order, and then actually taking another sell entry on this candle with the stop loss above the highs, targeting a 1 to 3 here. So now let's talk about why I was looking to sell on Tuesday. The first thing I noticed was that we ran the previous day's high. Whenever we run the previous day's high, we have to think about the daily candles open, high, low, and close. A lot of times when we raid one side or the other, we'll get a manipulation and then a reversal right back into the previous day's range. And that's what I started to notice here. We built up a lot of liquidity in this area going from Asia session into London session. And as we can see, we had London's low here, as well as London's high here. So not only did we have the previous day's high liquidity, but we had London's high as well as London's low here. So from the level of the previous day's high, instead of running it, London actually created an equal high. Price went bearish to grab the liquidity of London's low. Now, after we got that news event, that is where I started anticipating looking for a sell trade. So if we go to the 1-minute time frame, as you guys saw from the screenshot, my first entry was actually from this rejection here. So the bearish bearish pattern, as well as running the short-term low. So ideally what I wanted to see price do is impulse, run the short-term lows in this range, and basically flip this into an inversion fair value gap. Now, unfortunately, price wanted to range a little bit more and actually retrace back up, and it hit our stop on this one. So one thing I could say about this position is that since we didn't actually flip this imbalance and actually run the structural low, I should have been more patient and allowed price to come back after the structure shift. And as we can see here, we technically did create a sell side imbalance. So I can't say that it was a bad setup. It was more so just part of the probabilities of the strategy. Now, the second entry actually came from the raid of my first entry stop loss. Okay, so this is why it's very, very important to place your stop loss in the correct place. Let's say I place my stop loss too tight, like for an example, in the internal structure here. When I got stopped out, I could have seen this short-term level being ran and a sell-side imbalance being opened as a potential entry point. But instead, what I was focused on is the raid of the external liquidity that was formed by my first entry point. Stop loss was above here, meaning that if I got stopped out, I know that the whole idea in this range was incorrect and I had to simply wait for another transition, instead of trying to fight for new entries inside of this same consolidated range. Now, the second entry came after we actually cleared a short-term low in this area, and we actually started to create a volume gap. I entered the trade trusting that with all this order consumption above us, with grabbing the liquidity to the left, as well as the previous day high and the London high, that we were due for a huge move to the downside. And as we can see, it fell extremely quickly here. 1 to 3 was hit, and price continued to fall from this trade. Now, if this first entry was actually missed, how you could have participated in this was actually by drawing a fib from high to low, understanding that the 50% is right around this range and looking for a point of interest above it. So we had an order block with an imbalance under it. So here on this retest, this would have been an ideal re-entry into the market with the stop loss above and then allowing you to ride it to a new low under this previous candle. July 10th, the next day, actually ended up being a winner as well, and we only took one position this day. Now, as you can see, there were a lot of levels on my chart, but basically what I was waiting for was the end of this bearish order flow. I had multiple levels that I was anticipating price reversing from, and what I wanted to see was where we first got this shift running a short-term high and a buy-side imbalance creation. So we can see here, for example, we got a bullish candle that ran a short-term high, but by the time this candle body closed back down, it moved efficiently, meaning that there was no imbalance in this range. Same thing here. We ran a short-term high, but there was no imbalance left. And same thing here. So that is a cheat code to understanding when the market wants to reverse. So we entered as the price was entering this buy-side imbalance again and targeted our 1 to 3. And we could see that price took off perfectly. We took some partials off here and we had a couple extended targets. We can see TP2 and 3 was hit, as well as our final target for 1 to 6.45 risk to reward. So Wednesday the 10th was actually an interesting day. The main reason because we didn't run out the previous day's low, nor did we run out London's low, but we maintained it as demand to actually push price higher. So I want to give you guys an insight into what I was thinking for this particular trade. Number one, I was paying attention to the daily open. The daily open can give us a cue as into when a transition happens, if it should be taken or not. And what I mean by that is, if I'm looking for a buy trade, ideally I'm looking for a buy under the daily open, or at least the transition started under the daily open and we took the entry as close to it as possible. If I'm looking for a short, I want to be above the daily open. Next, if we switch to the 3-hour time frame, what we can see is we had multiple buy-side imbalances printed. This let me know that until price actually closes a short-term low run on the 3-hour and potentially opens up another sell-side imbalance, that this market is still very strong bullish. And of course, we also had an order pull off of this wick low. So now that we understand that the higher time frame is still in a very strong bullish bias, we understand that our last high was correlated to that wick high there. What we can do is start dropping down and understanding where the liquidity lies in the market. So the first thing I did when I dropped down to a lower time frame was try to understand what overlaps with our higher time frame points of interest. So we can see that we had this higher low point here that was created and price continued that impulse. We had a news event that actually came out at 8:30, drove price to our fair value gap on the H3 and expanded us above the liquidity. From there, we had another take profit event. And one thing we have to keep in mind when we're trading is price is always trying to take the liquidity before reversing. So what I mean by this is if we're looking to go short, a lot of times the market's going to try to hunt all of these stop losses to the buy side and then give us that reversal we were looking for, and vice versa to the buy side. So if we're looking to go long, we want to see price raid some sort of liquidity to our left. Now, the people who caught this first news event would be trailing their stops either under this low or somewhere within this range all the way up to this bullish order block. So all of these people were taken out of their trade, stopped out, and then guess what happens? the market reverses and goes right back in the direction they wanted it to. Now you may be thinking, why didn't you try to take a trade here even though you got a run of a short-term high? And the answer is we did not create any buy-side imbalances in the transitional phase, only way up here. And technically you could have taken a trade there, but it was a little more risky because your stop loss couldn't go under the swing point. So the entry I actually took was based off of this drop here. We got a short-term high, buy-side imbalance, and a beautiful retest into it. So if we look at the low, it's 20,721.75, and this low is 20,722.75. So beat it by a point, entered on that wick, and we got a beautiful expansion almost instantly. Probably had to wait about 15-20 minutes, but from that level, price took off extremely nicely. Considering that we only have around a 30-point stop loss, we can see that this impulse from the entry range easily went up over 170 points here. The 11th was actually my first red day, and as you can see, I entered around 845, 850, somewhere in there, but we ran a short-term high from our level. We ran equal lows, and then I was looking for an entry based off of this buy-side imbalance here, but unfortunately it failed. Price ended up trading through it. So that was the first loss of the day. The second loss actually came from this point here. So we had another transition actually come in. We had a inversion fair value gap. Then we had a new short-term high run, buy-side imbalance. So I entered as price was rejecting from this point, stop loss under the low, but unfortunately price could not hold and we actually continued dropping here. Friday, July 12th, we took another entry, and as you can see, this one looked a lot better. So we had a left head and right shoulder after a news event made this head pattern with a lot of order consumption. What we waited for was a shift with a buy side imbalance. So we see how we ran the short-term high, buy side imbalance, retest, and we actually took the entry there, placing our stop loss under the right shoulder. And price almost took off instantly from where we entered and just expanded extremely nicely. And here we can see the outcome. So we actually hit our take profit very, very easily on this trade. Price actually ended up pushing a bit higher, hitting TP2 as we can see here. And that was actually Friday, so it was the weekend, but we can see that all the extended targets were hit on July 12th here. Next, we have July 16th. So we can see that price basically formed a similar pattern to the last trade we took, but it definitely was not as clean. This was not the head of the pattern, it was just some higher low that was created in the impulse. And one thing I did notice is the shape of this pattern wasn't as good as the last. Before we had an actual quasi. This one we more so had just short-term high runs and a trade back inside of the previous candle's range here. And this was actually the start of the day I had -3R. So this trade ended up failing, trading back towards this wick. You can see I had marked off consequent encroachment as well, but it just simply did not hold this day. I did try to give it multiple entries, and as long as it fits your trading plan, it's perfectly fine to take them, understanding that the probabilities will still play out. So even though this day we ended up taking 3 losses, it was still based off of the strategy. We waited for a short-term high run, we waited for the retest into the buy-side imbalance range, and then we actually took the trade from there. So on the 18th, I actually called a buy for NQ, and this first trade sort of ended up working out in our favor, but unfortunately didn't end up giving us the full risk to reward we wanted. But we did run the short-term high, got the buy-side imbalance creation, and we entered on the retest. We were under the daily open, we were retesting a volume imbalance, and we also had the previous day's low under us, equal highs to the top as well as London's high. So what we can see is we ended up moving the stop loss to protect ourselves, because after we got this shift in structure, what I started to notice is that we were inside of a large imbalance to our left, and there was the possibility that price wanted to transition back bearish after running this short-term low and creating an imbalance. So I told everyone that, hey, if price does want to keep going our way, that's perfectly fine. But if it does not want to, and it wants to actually reverse here, then our trade would be invalid anyway. So we might as well place our stop loss under this low to mitigate our risk, because at first we had a 30-point stop loss. Now we only have a 5-point stop loss. So we ended up saving ourselves a lot of downside risk this day. So the first entry ended up being stopped out. The next entry, we actually took a short. So you can see the first buy was up here, and price ended up giving us an impulse directly through that level, running the previous day's low, etc. Now, after we got that new impulse leg, what I did was run my fib from the high to the low, waited for a retracement into the sell side imbalance. From there, we waited for a run of a short-term low on the 1-minute time frame, sell side imbalance creation, and we entered on the rejection of it here, targeting 1 to 3, which happened to be the lows that were previously created. And as we can see here, by 10:12 a.m. TP1 was hit and extended targets were given out, which majority of them were actually hit. So the only one we didn't hit was 19,725, but we did hit 19,807, 19,791. You could actually see that I took profits as we were sitting down here as well. So overall from these trades, you should be able to tell that my entry protocol and strategy is very consistent throughout all of my trades. And this definitely gives me an advantage when it comes to trading prop firm accounts. Now, before we wrap up the video, I did want to give you guys my experience with Topstep so far. So to be honest, everything has been extremely easy and very smooth. Their tech, as far as their website, is very good. Signing up was a breeze. And once I passed the evaluation phase, by the time the market closed around 4 p.m. CST, I received an email saying that I passed. Once I got that email, I simply had to log into my account, pay the fee to actually upgrade to the Express account. And within, I would say 5 to 10 minutes, I had my new credentials and technically was able to trade even though I didn't. Now, comparing this to the time it takes for my funded futures to get your actual funded account, usually it takes me till the next morning. So let's say I passed my account today, the market would close, I would get the notification through email that I passed. And then by the time I wake up tomorrow, usually it would be in my inbox. So it's not as quick, but still usually it's there before I would even need it. I've personally been going with Tradeovate when I trade futures. I haven't had too many issues with their platform, but recently there have been a couple glitches where you weren't able to actually take your trade position or manage your trade correctly for a few minutes. And it was a couple outages going on, so I know it could be that, but besides that, everything has been pretty smooth for me. After I get this account situated, get a payout, I'll take on another account and maybe I'll use a different broker just so I can review it for you guys. But nonetheless, I hope you enjoyed this video. Take care.